Welcome to RenMac Off Script. We open to discuss markets, economics, policy, history, and life. It's the 24th of May, 2024. I'm Jeff DeGraff.
I'm Neil Dutta.
And I'm Steve Pavlik.
As a reminder, all the charts that we reference are posted to our Twitter account at RenMac LLC and our RenMac LinkedIn page. You know, I saw the other day, it is Memorial Day weekend. Happy Memorial Day, guys. But something about the Sperry and the topsiders are making boat shoes basically are making a big comeback. And I swear to God, I said this. I said to my wife, I'm like, did they ever go out? Like, I've worn boat shoes my entire life now that we're getting into boat shoe season. And I guess, you know, these fashion forward people say that that's really, that is not something that you should be wearing until maybe it's making a comeback. So if you sit around long enough and wait, you'll be back fashionable. I guess that's the real punchline here. Neil, do you own boat shoes?
No.
Do you even know what I'm talking about?
Yes, I know. I know what Sperry's are. Dockers makes them too.
Yeah.
I used to rock them. I don't anymore. Maybe if Fendi, Dior, or Gucci start making it, I'll buy it. But
I think you can get some velvet ones if you want, or cashmere ones. I know that's your
suede is what they those I've seen them. They have like the little tassel on the front sometimes too.
They're not tassels, but I hear what you're saying. Now that's different, but okay. Let's get into speaking
it's
of
like a very like Greenwich, Connecticut thing.
I mean, it is part of the vodka triangle. There's no doubt about it. I mean, you're dead in the middle of the vodka triangle when you're wearing those things.
I'm more of a open toe sandal guy myself.
Yeah, fair enough.
Don't believe in wearing foot prisons.
So Nvidia was the big news this week. We don't have any, particular insight on Nvidia from a fundamental standpoint. It's not how we think about the world. I thought it was pretty interesting yesterday that you had Nvidia was obviously rocking it up almost 10% at one point during the day. And while that was happening, there's basically 65 technology names within the constituency of the S&P 500. Only 10 tech names were actually up yesterday, in the face of that, which I thought was interesting. It was a little bit of, dangling the shiny object so everybody's seeing it and paying attention to Nvidia while the pickpocket is taking your wallet. And we only had 12% advancers in the market yesterday. So all things considered, yesterday was a distributive day in our work, an outside reversal day, if you will, where we opened higher than the previous day, closed lower than the previous day's low. And while those aren't necessarily big top formations, certainly coming with this overbought condition does imply that this is in no way, shape, or form an early stage market, and there probably are some vulnerabilities like we saw in home builders, which I want to talk to you about, Neil. But first, let's hit on the market PMI data. Bond market did not like what it saw. How do you think about the market data versus the ISM and just the way it's computed, and which one do you tend to favor?
This is the S&P Global Manufacturing and Services PMI data. And you're right, the composite PMI, when you take manufacturing and services together, it improved to 54.4. So clearly an expansion territory. But I think more importantly, that's the best that it's been in almost 2 years. There are, as you mentioned, sort of important differences between the ISM and this survey. The ISM, for example, is an equal weighted index of 5 components: new orders, production, employment, delivery times, and the inventories component. By contrast, this S&P Global data series, they don't weight the components equally, right? So new orders gets more of a weight than delivery times. Production has a higher weight, so it's not all equally weighted. So it's sort of the employment orders and production tend to be overweighted more in the S&P Global one relative to the ISM. So that's an important distinction. And the S&P Global is also a broader survey. I mean, there's 600 respondents compared to 300 for the ISM. So, as a standalone basis, if I only had to pick one, I would probably pick the S&P Global, but the markets definitely still love the ISM. I think that's broadly because it's got such a long and robust data history. It goes back to 1948. This series doesn't go back nearly that far. But at any rate, I mean, for the bond market to sell off as much as it did at 9:45 on Thursday tells you that it's putting a little bit too much weight on these surveys. I mean, the services number was the one that really beat, and that tends to be actually less useful as a signal for what actually happens in the service industries than the manufacturing PMI is for the manufacturing industry. So, I think it's kind of amusing. I mean, I think people are sort of getting on every little data point to try to craft a narrative over the next couple of months. But I don't think that the relationship is that mechanical between, okay, the services PMI rose this month and therefore inflation's lighting back up. I mean, there's not really much evidence of that, and that's it doesn't really work that way. It was a data point. It was better. And I think more importantly, when you take a step back, I think the consensus is broadly on the right side of growth. I mean, this is not like we were earlier in the year where the consensus was very much offsides. We've seen a fairly dramatic upward revision to GDP expectations so far in 2024. We went into the year around 1%. Now we're around 2.5%. So I think the consensus is on the right side of the eight ball. And now that the consensus is basically where it should be, you should expect to see a more mixed data flow, right? There are going to be weeks where the data beats. There's going to be weeks where the data surprises on the downside. But if the consensus is about right, you should expect to see a more of a mixed data flow at this point.
And I want to talk about housing a little bit, but from our vantage point, the relative performance is still actually in pretty good shape. But we are seeing some of the deterioration where you're not making a new relative strength high. Where I think importantly from our SERM model, which stands for standardized excess return. The return function or profile of the housing names in aggregate are every bit as strong as they were back in the early 2000s. And that just puts us on high alert that you've had these excess returns per unit of volatility or risk. And that's the point at which you tend to develop tops. And so we become hypersensitive to any cracks or fissures in that armor. And we did see some relative strength breakdowns in individual names, not in aggregate for the group, but in individual names here this week. What's going on with housing, from the economic data perspective? Are you concerned, or do you think it's just maybe a pause here as we adjust to these rates and maybe the potential for the Fed in the future?
Well, it's interesting the example you put out, the 2000s. I mean, if it's like the early 2000s, that was a period where new home sales kind of housing kind of went sideways for a little bit before vaulting from 2002 to 2007, right?
Yes, 2005 is when this thing peaked. So whatever was happening to the data
Oh, well, in
2005.
2005, that's a different situation. But I don't think anything that we're going through right now is anything like the housing bubble.
Totally agree. Totally agree.
I think it's sort of crazy to even think like that. I mean, the home builders themselves have much stronger balance sheets now than they did back then. And my own view is that they could pretty much sell whatever it is they want if they chose to. But yeah, I mean, I think the housing market is kind of moving sideways right now. Interest rates are still high. You've only seen very modest declines in mortgage rates, and that's keeping transactions low. So there's not a lot of transaction activity in the housing market right now, whether that's home resales or even new home sales. So if you look at new home sales this week, they fell for the month of April. And I think what's important is that you have the home sold but not yet started. That's actually been coming down as well. That's off about 20% against last year. So that to me would suggest that single family construction probably takes a breather for a little bit of time here. I think the builders probably focus more on finishing off the homes that they've already sold as opposed to breaking ground on new ones. So I think that's sort of the theme going forward. So we should see some increasing single family completions. but I don't know that necessarily we're going to see new construction pricking up over the summer. Um, Obviously, if interest rates start to come down, that should lift demand in the housing market. Um, but you do have to worry a little bit about what happens with builders, because what's been going on is very sort of ahistorical, right? I mean, you've had a very rapid increase in mortgage rates. We basically went from 3% to 7%, and during that time, home builders have done exceptionally well. As you mentioned, like relative performance has been doing really well, during this period. So you have to ask yourself, if rates went up and home builders did well, what happens if rates go down? Will they do as well? And I think that's something that remains to be seen. Builders should benefit just from the overall sort of rising tides lift all boats story. But at the same time, if interest rates start coming down, that should unlock some inventory in the resale market, right? Builders have been enjoying this unique circumstance because people are locked in with their mortgages and they don't want to put their home up for sale, because it would mean they have to go into a higher mortgage rate when they go into their new house. And so what that basically means is that the inventory of single family homes, I mean, I think 30% plus of that is new. That's like 2-3 times what's normal. So builders have a lot of of the inventory that's out there in a way that is not normally the case. So I wonder, if interest rates do come down in a more meaningful way, does that unlock more resale inventory? And now builders find themselves essentially competing with existing properties more so than they've had to. And does that kind of weigh on the names? I mean, that's possible, but you could see a scenario, Jeff, where declines in mortgage rates are probably better for real estate brokers,
Right.
than they are for home builders.
Right. The product mix is more favorable for them. Well, certainly you're seeing the, weakness in home furnishings, home furnishing retail, et cetera. So the stuff that's connected to to the turnover is certainly feeling the impact of those higher rates. And we had, this last week we updated our strategist survey, and we basically measure what the rate of change is on the strategist S&P forecasts, and that got into what we would call the danger zone here this last week, in that strategists have been forced, and this isn't about any one strategist. I know everybody wants to kind of pick on certain people at any given point in time. This is an aggregate, so it has nothing to do. It's equal weight. It has nothing to do with any one person. But the idea being that the strategists have basically capitulated to the bull case, right? They had their price targets that were substantially below the S&P spot price, and now when you look at the rate of change that they put on for that expectation, they've now basically said the market is going to be higher, not lower, and done it in a pretty significant way. That is not the end of the bull markets, but that certainly is a late stage bull market when the strategists capitulate and you see these big spikes. Historically, that's been a point of softness or vulnerability for the equity market. So we'll certainly keep that in mind. Again, I don't think that's a problem right here. I think it can be a problem for 2024 towards the back half, but I don't think it's a problem right here. So we'll continue to watch that. As we talk, let's talk a little bit about the election. The polls, any shifting in the polls, Steve, particularly from the battleground states? I know that's going to be of primary interest between here and the election. Where does Biden sit versus Trump, and where does Trump sit versus Biden?
Well, so far, it's still largely more of the same. And we saw a new battleground state poll from Bloomberg. Biden was marginally better compared to April. Trump's lead amongst the battleground state voters was now 4% over 6% from last month. And if you look at, state by state, Biden's still only ahead in Michigan, improved his margin from 1% to 2%. Trump actually improved his percentage increase over Biden from 1% to 2% in Pennsylvania. We talked about how there may be conflicting constituencies there with regard to Biden's policy towards Gaza. But really, the answer is no. And I think that's interesting because when you look at the things that have happened, you've had Trump sort of confined to the courtroom and Biden trying to go out and campaign to take advantage of that. And the fact that that's not moving polls is not encouraging, I think, if you're the Biden campaign. So while the polls haven't really moved, the betting markets have. When you look at the Real Clear Politics average of betting sites, Biden had been ahead in April. And now you have Trump as of yesterday with over a double-digit lead. And so I think some of those things we just mentioned to that may be concerning. I think there's also some belief that Biden, as we discussed last week, agreeing to debates is maybe a sign of political weakness. And maybe that's how the betting markets are interpreting that. So that's sort of the latest thing at the race. One thing I'd point out in the polls, some Democrats have gone on TV to criticize him, say, well, it's not true about Biden. But interestingly, you have a lot of these same polls showing Democratic Senate candidates, congressional candidates in the House as well, pulling well ahead of Biden. And if you look at Gallup's sort of approval rating, Biden is sort of at a historical low. And that's going to be important to watch moving forward. I'm not saying that necessarily means the polls are right or wrong. We're not going to know till later. I think the White House will tell you that they hope that maybe polls have overcorrected support for Trump, which last two presidential cycles were notoriously inaccurate and underestimating support for him. That's one theory. But again, we'll find out. But that doesn't explain the disparity. And we've only had one instance of ticket splitting in the last two presidential election cycles, where you had a state select a different candidate for the Senate from a different political party than the presidency. That was Maine in 2020. Biden won that. Republican Susan Collins mentioned that. So at some point, something has to give. So stay tuned on that.
When you look at I know there were some the judge allowed I think the New York version of the Hunter Biden case to be postponed, but closer to the election. We can talk about that a little bit, though it's not that interesting. But I do wonder, is the trial for Hunter more of a liability for Biden than the trial for Trump is a benefit to him? In other words, are people just so tired of this kind of persistent courtroom drama with Trump and all these various charges that they've kind of lost interest, whereas Hunter's might actually be of more interest because it's unique?
I mean, different people with different views have different takes. I guess what I will try to do my best to not inject any particular bias would be the issue with Trump is this hush money allegation has been around predating his 2016 presidential run, which is why I think in most cases it's already baked in. I think the thing to watch next week, skipping ahead, I know you always ask that, is we're likely to get the verdict there. And the options are either acquittal or conviction. If I had to place a bet, my guess is on some sort of mistrial where you can't convince all 12 jurors of one thing. I think that's probably a political benefit to Trump in the sense that it's over. And this is the least politically consequential trial, according to a lot of analysts, compared to the others. I don't think the others are going to happen. So that's why I guess I would come down more potentially on the side for Biden in the sense that, if you delay this trial to September, that's in the thick of when people are actually voting early. And look, if the reporters aren't going to ask it, you can bet Trump will during one of these debates, assuming that they happen. Is Joe Biden going to pardon Hunter Biden? No father wants to deal with their son going to federal prison over these charges. If you look at the case, it's really going to focus on a lot of the claims in the laptop. You recall in 2020, it was dismissed as Russian interference. Turned out it was authentic. So, it doesn't help Biden. But I guess where I'm coming at is more, I think a lot of stuff with Trump in this particular hush money case has already been baked in for several years versus there's probably more unknown here for Biden. I think that's probably the downside risk there.
But norms, what about norms? What about what's right? Oh, I guess that only works one way. Speaking of Hunter Biden, my wife and I just finished the 3-part Ashley Madison documentary. Surprisingly, a current president's son was mentioned in that documentary.
Oh, really?
Yeah.
Interesting.
My wife brought that up to me yesterday, and she said that the subscription base has actually doubled since that scandal.
Yeah. Your first thing should have come out of your mouth was like, "What's Ashley Madison?"
Well, which it was. But the second thing was, My familiarity with that is that no, but she did say that I couldn't believe it. I'm like, I didn't even think it was around anymore. Like it was,
Yeah, I know, right? It's
yeah.
crazy. I mean, how would you after all that happened, what kind of idiot would actually think about you know,
I
anyway.
was surprised there was a documentary. I'm like, well, they're really scraping. This is right after our boat shoe conversation, by the way, but it was scraping the bottom of the barrel of needing content for Netflix, I guess. Neil, what is on the docket next week in terms of economic data?
In terms of economic data, we're going to get the consumer confidence data from the Conference Board. This one is something I'm keeping an eye on because the Conference Board data, unlike its University of Michigan counterpart, tends to be more sensitive to labor market conditions. There's also been some adjustments with the University of Michigan data where they've moved more to an online sample than traditional phone. So it's kind of messed up the data a little bit, some would argue, but the Conference Board data traditionally is seen as more of a bellwether for the labor market. And, what we want to see is, are we continuing sort of in this benign cooling, or is it, something potentially worse that makes the trade-offs for the Fed look a lot trickier? And then we'll get the core inflation data at the end of the week. This is April data point, the PCE number. Markets are at 0.3. I don't know. I mean, I think there's a risk of a 0.2 on the core PCE deflator. That comes out on the 31st, which is a Friday. And then I just missed it, the GDP data also, the first pass on the first quarter. The second pass on the first quarter data is coming out. And, consensus is looking for a down revision to Q1 GDP growth to 1.3%. There's a little bit of a compositional story going on here, right? I mean, the underlying details of Q1 were fine. I'd expect GDP growth to be somewhat stronger in the current quarter, that's Q2. But the mix will be a little bit worse. So it's kind of a give and a take, you could say.
Steve, how about DC? What's going on there?
Honestly, there's not going to be much. We're on a recess period. So again, that's why I think most of the focus is going to be on Trump. I do want to give a shout out to my brother-in-law, Marine, and father-in-law, Marine. He actually ran Arlington Cemetery as well. Memorial Day carries a little added significance for them. So that's probably what we'll be focused on Monday.
Yeah, that's great. Happy Memorial Day. Well, certainly we'll be watching the composition of leadership and whether or not we can get follow through from the tech news. Obviously, that is now in the rear view mirror. And, the question is does that sentiment have the ability to push things higher, or will people just kind of wallow in that? And we think it's probably the latter for a lot of those names with consolidations from this point. Certainly the trend is still intact. The 50-day moving average right now at 5170 on the S&P, which should serve as tactical support, deeper support at 4954 on the S&P. And the 10-year yield, 480 on the upside is resistance, 435 downside is support for those yields. Well, join us again next week. We'll be 1 week older, 1 week wiser. Don't forget to follow us on Twitter. And if you want deeper insights, you can join us at renmacaccess.com. Until then, I'm Jeff DeGraff.
I'm Neil Dutta.
And I'm Steve Pavlik.
We'll see you.